All right, guys, how are you doing? Let's do this. Let us do this. Let us do this. And while we're doing it, let's make it as quick as possible so we can all go sleep. I personally have had a week and 3 halves. Right. Let me put this racket up behind me. Actually, it's fine. That's fine. That's fine. So, for those of you who were with me this afternoon, I'm sharing this screenshot because I'm crying for a second time. This is the second mega trade that I've missed that I stalked and actually gave you guys this trade in the afternoon. The difference was I didn't expect all this to happen in one full day. I was kind of thinking, today would mess around a little bit, go back up, and then give me an entry tomorrow. I wasn't paying attention during New York. I turned my head one way, turned back, and boom, we were gone. GU looks like it still may give me the entry I'm looking for tomorrow. But look, guys, look at this level of precision. I mean, if this doesn't excite you, I don't know what will. Look, just see. Look at how this thing is just pinging off levels that we draw in advance. It is phenomenal. If you are an experienced trader, you should appreciate how great this stuff is. Anyways, it is what it is. So 78.6 convergence with the order block, and we go boom. So we may have a trade tomorrow on GU. But where EU is concerned, commiserations to me. And interesting, the same day I teach you about the manipulation block, there we have a manipulation block. I've been holding off on showing you trades with manipulation blocks because I know I hadn't taught you guys yet. But I taught you earlier today, and then look at a perfect example of one. This forms. Give me a quick second, everybody. One quick second. Right to who? Do, 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 do. Right, so where was I? This forms what looks like a bearish order block, and then it's manipulated, violated back to the upside. That high is taken out. It comes back down through it, and the first touch is golden. Boom. 1%, 2%, 3%, 4%, 5%, maybe even 6%, maybe 7%, and then more. So I don't know, unless I have a deep retracement early tomorrow that brings me back, say, to this level here. Let me take that out of the way. If I get something that brings me back, say, here tomorrow in London or New York, I'm just going to draw that out. Then I may consider that. But even then, I don't know. Let me see. Let me throw a Fibonacci in that. What are you guys saying in the comment section? I should take heart, Gerard. Yes, I am taking heart. I'm taking my heart in my hands. Yeah, but it's been a good week. It's been a good rest week. I haven't taken any live trades this week. The two I stalked didn't pan out, or no, they panned out. I just wasn't there to take them when they did. So let's see. Let's assume this gets down to here tonight. Okay, yeah, yeah, 61.8, 78.6. Yeah, I can see that. I could definitely see that. Also, if you look here, this here is a manipulation block. I know you can't see clearly. Price goes down and then it drives up and then comes back down through it. So there's another one here. If you drop down to 50-minute, that's a 50-minute chart. If you drop down to a 5-minute chart, yep, you'll see it. There you go. So that's the block there on the 5-minute chart. So, although I don't like this one because it's not at the 61 yet. So I am going to also, there's another one. So actually, I'm just going to take this entire thing here. Yep. And wait till it gets to at least 61. If it gets to 61, this will be my trade. I'll put my stop loss of my entry there. I'll put my stop loss conservatively up there. And if it gets back down to the same level, it'll give me 1, 2, 3, 4. Yeah. Otherwise, I can do a 5 or maybe even a 6. So let's see if I get another entry tomorrow. If not, it is what it is. Right. So I'm going to have to, actually, I'm going to leave that on because I want to be able to track this tomorrow. I'm running out of space on my chart. So let me see. Let me use another. Right. So let me use this one here. I'm going to make this my teaching to make it easier for me. I've got 4 meta traders open because I got 4 accounts, 2 live, 2 demo. A small live account, a big live account, and then a commensurate small demo account and a big demo account. Let me use this one to teach today. And if you know anybody who should be here, who's not, give them a shout. Tell them we are live. I know the stragglers like to come on. So what I want to show you guys today is one of the staples of my trading, right? It's how I trade. And I need you to follow me very carefully on this one. This is one of those fundamental concepts that could make or break your entire career. If you get this and you apply correctly, you are well on your way to being a market breaker trader. By the way, some of you have paid up to date. That's good. Or let me know when you're paying. That's great. For those who should have paid, who haven't paid, if you're a registered student, please sort that out before noon tomorrow. Right. So you will get you'll get the next installment of the PDFs and market breaker course videos, pre-recorded videos, once your payments received for those who haven't made them. So the first thing you want to do is ask yourself, what kind of trader am I? That's the first question. What type of trader am I? And by that, what I mean is, what is the length of time? Let me give you this. Let me write these down. Right. So we finna write this down. So number 1. What length of time do I want to be in a trade for? It's the first question you want to ask yourself. or should I, let's put it this way, let's rephrase this way. What's the maximum length of time I want to be in a trade for? Let's make that smaller. Let's make that a 16. And let's make it purple. All right. Now, notice I say maximum because you might want to only be in a trade for 5 minutes, but some trades will go on for 5 days. So what's your threshold? If you naturally are a patient, calm, cool, and collected person, you're straight. If you are impetuous, and this is where being honest with yourself comes in, you can lie to everybody else. The one person you have to be honest with is yourself. If you get impatient, impetuous, if you are compulsive and spontaneous, don't try and fight it as a trader. Fix it in other areas of your life and come back and be a better trader. But while you're fixing it, trade to your strengths. If you're naturally a patient, calm person, you can stay in the trade longer. You'll stick with your original analysis. You'll ride it through. You can be a position trader or swing trader. If you get antsy, your feet get sweaty, your palms get tight, you want to be towards the shorter end of the spectrum. If you are compulsive, if your brain fires darts every 5 seconds, then you probably want to be a scalper or at best an intra-session trader. We've spoken about this before. For those of you who started 2 weeks ago, I'll repeat that class for you. Finding the kind of trader that you are. But this is the primary question. Based on that, your next question is, what time frame is my natural favorite? And this will take time to figure out. It could take you years to figure out. And the factors that go into that are every time frame has a slightly different way it behaves from other time frames. When you get to the advanced section of the Market Breakers course, we will take you through every single time frame one by one and show you how each of them have a completely bespoke mode of operation. When you're analyzing each particular time frame, there's things you're looking for that you may not be looking for on some others. Some of them share the same ones, but none of them have the exact same profile. Over time, you're going to gravitate to a particular time frame as one that you really understand. You get it. You understand the flow. Also, you are comfortable checking your price charts in that interval of time, which is number 3. Number 3 is, how often do you, or let's put it this way, how often are you able to check on your charts? Because whatever time frame you're using as your primary time frame, you need to be able to check your chart at least once every that interval. If your primary, we can show you that in a second. I'll just use the word primary for a second. I'll use a different word in about 5 minutes. But if your primary time frame is a D1 time frame, boo, you better be able to check your charts at least once a day. If you cannot check your charts at least once a day, you should not be trading. Let me repeat. If you're not going to take the time and the discipline to check your charts at least once a day, trading is not for you. You know why? Because you're lazy. Once a day is the minimum a trader should check your charts on whatever pairs are in your watch list. If it's your 4-hour guy, you check your charts every 4 hours. If you're a 1-hour guy, you check your chart every 1 hour. Now, if you're a 15-minute or less guy, it doesn't necessarily mean you have to check your charts every that often, but, check them, say at least anything beneath an hour, you should be checking your chart at least once an hour. It's my personal opinion while you're in the trade. Okay. So once you've asked all those questions, give me a second. Once you've asked all these questions, you will now be in a position to determine your reference time frame. Determine your reference time frame. By reference time frame, what I mean is, this is the time frame. What have I just done? I keep doing this. Okay, so that's number 4. I was supposed to duplicate that. So let's see, what was 3 again? How did I word number 3? How often are you able to check your charts? Right. So you determine your reference time frame. For instance, on a reasonable day, Priscilla, I like that. We can put that up there. You do need to develop good trading habits. I do agree. I absolutely do agree. And we're going to look at that next week. The habits of a successful trader. It's 12 habits every successful trader has to develop. And then there's another 12 bad habits that every successful trader has to do away with. That should be fun. Wait till we get there. So, determine your reference time frame. So, for me personally, my reference time frame is the 4-hour chart. I'm looking at my chart at least once every 4 hours. But I've also figured out the characteristics of a 4-hour chart, and I'm very comfortable with them. I can read a 4-hour chart like the back of my hand. I can take one look. I don't need more than 1 minute. A few seconds, actually, 5 seconds. I can take one look at the 4-hour chart and I can spot what's going on over time. Each of you will gravitate to a particular chart. Having decided that, this is my opinion. It's not law, but if you trust me as your instructor, your mentor, whatever, your guru, your sensei, whatever, well, learn to do it my way, and then when you perfect it, you can throw your way in as the sauce. So make my way the bread, the rice, and then your way can be the stew and the gravy. Pick 2 time frames above and beneath. So, the way I trade, since the 4 hours my reference time frame, I'm going to be incorporating the daily and the weekly, as well as the 1 hour, and in my case, the 15-minute. I skip the 30 minutes. Most other professional traders do that. Some people really like the 30 minutes. I know people who do really well on the 30 minutes. It's just my preference. I prefer the 15 to the 30. Again, because I think the 30 and the 1 hour are very similar. There's very little difference between them in my opinion. There's nothing the 30 tells me the 1 hour cannot, in my personal opinion. But I find that I also gravitate towards the 15-minute time frame. So the 3 time frames I'm the best at are 4 hour, 1 hour, and 15 minutes, especially the 15-minute time frame. I have figured that thing out, especially as an intraday trader. So I, at any point in time while I'm looking for a trade or in a trade, I'm working all the way down from the weekly to the 15 minutes. But I never forget that the 4 hour is my reference time frame. What that means is I am technically always trading a 4 hour time frame. My entries and exits are going to be on the lower time frames, but the 4 hour tells me what to do. So for instance, when I draw things like my controlling highs and my controlling lows, I'm drawing them based off the 4 hour chart. All right, I haven't, 1 second. Let me add this here to this one. Feeble level, add 0.214. Let me go and call that the 21.4. Right, so I'm doing it based on the 4 hour chart. When I'm doing my expansions and retracements, trying to find discount to premium levels. One quick second, let me get these off. What did I just do? Sorry. Premium levels. I'm doing them. One second. I'll just leave those in there anyway for now. I'm doing them based on the 4 hour chart. It's my reference chart. Never forget what your reference time frame is. In essence, your trade ideas and scenarios are following institutional order flow, price action principles on that chart. Right. Now, let me know if you guys follow me so far. Let me know in the comment sections if you're still with me so far, if I haven't lost you. So based on that, you're going to have 5 time frames you're looking at or that you are incorporating into your trading. I know people say, oh, that's a lot. That's too much. Stick with me. Time frame 1. Time frame 1 is your big picture time frame. That's the highest one. For me, that would be the weekly. So first of all, let me open up another chart for this one actually. Where are we right now? Okay, we're here. Okay. We are here. Right. So when I first open my charts trying to find a trade, the first time frame I'm going to look at is the weekly time frame. And all I want to see from the weekly time frame is the big picture of what's going on in price at that moment. So I've done this several times in the last few months. On the EU, this is the big picture. We started from down here to up here. So that's the controlling high, the controlling low. Right now, we came to an area of deep discount. We're now back in the fair price or average price range, right? And so that, of course, we've also had a market structure break to the upside. There. There. And then price came back down to close the gap fully. Well, close the gap here. It came back down into that order block there. It's the order block there. And then it rallied, what you call it, consolidated. Then it broke the market structure here. And so I expect price to do this. And then that. at least here, and maybe higher, but at least back into this region here. This is my big picture. You guys, let me know in the comment section that you understand what I'm saying so far, because I really need you to get this. This is my big picture. I can't take any trades off this, especially if I'm really looking at the 4-hour chart. Look, see, look at that. What looks so small there on the 4-hour chart is humongous. And if I drop down to an intraday chart, like a 1-hour chart or 15-minute chart, the entire range of today, right? Let's see now. All 90 pips of today has not even left this area here. So this, in essence, I can't take trades based off my big picture chart, but it tells me what's price doing in the bigger scheme of things. It gives me a bird's eye view, 100 feet above view. It gives me, what's what I'm looking for now? Context for where we are and what's likely to happen. But I can't take any trades off it. So that's my big picture time frame. The second time frame that I'm going to be working with is going to be my bias time frame. Now, what I use my bias time frame for is to literally tell me, are you hunting for a trade long or short? That's it. Let me repeat. Are you looking to go long or short, up or down, bull or bear, north or south, buy or sell? Using my personal trading profile, that would be my daily chart. So I expect over the next few weeks price to drop down and then bounce back up. However, right now, over the last few days, we've had a consolidation on the daily chart. That says, over this last period of time here, that price hasn't yet decided whether or not it wants to make this move yet. So the last 4 days here, up, down, up, down, up, down, but trending up. However, I can see that every time it goes up into that level, there, look at it, right? Something sends it back down. So the daily chart is telling me price is not willing to push up properly. Something is rejecting it from that level. Give me a quick second, everybody. So that's the first thing. Secondly, I can see here that we're very close to an engulfing. Now, I don't necessarily need the full engulfing today because this in itself is a powerful signal. The fact that price has been driven back from that level so violently this time, and now it has created a stop run. If you look here, this here, people would have had stops there. So far, those stops have not been triggered. They weren't triggered here. They weren't, let me get rid of this one. They weren't triggered here or here on any of these days, but now they've been triggered and it's coming back this way. If I see price get beneath that level, and I don't necessarily think I need to, but to be on the safe side, if it gets beneath that level there, I now have a bias for tomorrow. You cannot pay me to stay in a long buy trade tomorrow. I may take a long scalp to get to a level, but tomorrow, if that fulfills, I will be looking exclusively at shorts. So for the way I trade, that's all I use my daily chart for. Actually, that's not true. That's not true. Let's come back here. Now, both your big picture time frame and your bias time frame will also give you significant price levels and liquidity profiles. You want to draw working all the way down from your big picture time frame, in this case my weekly. Let's go back here. You want to draw, let's get rid of that, and this, and this, and even this. You want to draw significant levels and liquidity profiles. What levels do you want? Let me go through this with you real quick. These are important. Opens, highs, closes, and lows on the big picture time frame candles. So for me, for a weekly candle, the open, the high, the closes and the lows on the come back here on the weekly candles in that area. Let me show you. So for instance, that's a high there, that's another high, that's another high, that's a low, that's a low, that's another low, although they're very close, that's a low, that's currently a low, but it could also be a close, that's an open, that's a high, that's another high that's very close, that's an open, one second, that's a close. What else have I missed? Let's see. I think I missed a couple. Come on. It's an open, although that's very close to another one. Come on. Okay. Come on, MetaTrader. There we go. And that's another one there. Cool. Also, there would be, in case price had a big run 1 week, which is unlikely that big, but there'll be that one there. All right. I hate it when MetaTrader does this. You know what? I can't be bothered. Just gonna draw another one. That's an open there. That's a high there. That's very close. Will you give me this now? Okay. Throw that in there. One there. And I am going to stop here. There's a couple more you could do. I'm going to stop here. Just one, it's getting messy, and secondly, for the sake of time. Now, in case you're wondering, that just looks like a whole bunch of malarkey. Okay. You say that. That's on you. I'm just going to drop down on this time frame to a 15-minute chart. And I want you to now look at those lines there real close. Now, I didn't test this out before the class. I just picked a pair. But I know from an experience that this happens all the time. Right. So let's make it an hour chart. I want you, if you can look through the maze of purple, I want you to see how much price respects some of those lines. And of course, we knew some of them were too close to each other. So usually I would pick one or two, but I just drew all of them just to show you what I meant by opens, highs, lows, and closes. So for instance, for those of you who are new, if that's a candle, that's the open. In an up candle, sorry, that's the open. That's the close. That's the high. That's the low. On a down candle, that's the open. That's the close. That's the high. That's the low. So do that on the weekly, because that's my reference, my big picture time frame. And then come back down. Let's use a 15-minute chart to make it. Let's just look at the precision. Look at that. There. And there and there. Can you see that? Let's look at this one again. Look at that there. Can you see that? Can you see that? And even here. Can you see that? Let me see that there. We go further back in time. See that? And that. And that. And I could go on. I mean, look at that one there. Type in the comment section if you can see this for yourself. And go back. I mean, look, it's like magic, isn't it? This one here. Look into the future. It's the same one there. Why? Because price respects historical levels. That one there. Let's go back and see. Yep. If you drew this line further back. So price respects historical levels, right? Why? Because market makers are position traders. We looked at this last week. So you want to have those levels on your chart. Now, like I said, if I were to be really serious about this, I wouldn't have every single one there, especially the ones that are so close to each other. So let me see. This one is so close to this one here. But I'm going to remove this one to show you how. Look at this. This one here, this open here is exactly what price respected there. Can you see it? Right? So I'll take that one away. And I'll put this one in. No, not you. Up. No, this one. Come on. I'll put this one instead. And then that's the body there. And you see that it is this low this week that price respects the next week. It is this body that it respects here. You can see that this low here is pretty much what forms the close of this one there. This high here, right, forms this, causes this open there. If I get rid of this one here, you see that this high here also pretty much forms this there, or this. So you don't need all of them, is the point I'm trying to make. I'm trying to get rid of the one, this one there, get rid of that one, because this here is what. So it doesn't need to be all that scrunchy. Let's look at that now. I think that's a lot better. But you can still see that I haven't removed all the ones that formed in the last 2 weeks. The historical ones are still prophetic. Look, this high here is what causes this level, this reaction, and this reaction, and this one, and the one that informed our trade today. Now, Joshua took this trade. I didn't take it. I was too busy chilling. But Joshua took this trade today. This was the level that was responsible for it. So you want your opens, highs, and close in a big picture time frame candle. Let me split that up. So number one, number two, you want your swing highs / lows and liquidity profiles on your bias time frame. Again, let me break that up. This stuff I'm giving you right now, nobody taught me. This all came from years of painful experience. I wish somebody broke it down to me like this when I was starting. I paid plenty of money over the years in losses and tuition, and nobody ever broke it down to me like this. This could have saved me at least 10 grand and plenty of pain over the years. So let's go back to this chart here. On the daily chart, I want swing highs. Now this is a swing high, this is a swing low. So you're no longer looking at just the candles. You're looking at So no longer just the open highs, lows, and close on individual candles. You're looking at the turning points, the swing highs and lows, and the liquidity profiles. Let me give you an example. And if one overlaps, so for instance, this would overlap. That's a swing high. That would overlap with that level. We don't need to draw it. That's a swing low there. You could argue we don't need it because it's so far away from where price is right now. Let me take that off so you can see clearly. This is a swing high here because of here, but it is so close to that line there that we don't need it. So I'm going to leave the swing high and I'm going to take this line off because they're so close, right? So I'm going to leave that there. This is another swing high here. Now that one is close to this. I'm going to take it off. I'm going to take it off because again, it's so close. Although this one, you can see how this candle here, the open of that candle is precisely, look at that. Look at that magic. See the open of this candle here and the high of this candle here to the pip is to the pip. Let me show it to you. These are the things that excite me about trading. Look at that there. See that there? Right? That body and that high is exactly that low there. I don't like drawing lines on my chart, and you don't like making money. Anyway, but I'm going to take away my perfection. You know what? No, I'm going to leave that. That's too perfect. I'm going to take this one away instead. So we don't need that one there. Because they're the same level pretty much. That's another swing high. That one is very close to this level here. And notice how this high is exactly what forms the body of that candle right there. Can you see that? But I'm gonna take that one away. I'm gonna take that away. Take that away. And instead I'm gonna leave the swing high. Pretty much same level. There's a swing low here, but it's the same level as that one. So this high here is what forms this low there. What else am I missing? The other ones are so far beneath price right now that we don't need them, but I'll just put that there anyway. So you see those three levels I just added on? Let's go back down and look. 15-minute chart. See how in the past, now we drew the level way, way back there. But look at how it has been respected through time. See how price treats it like an uncle or grandpa? That's just the way the market works. So I want my significant price that was liquidity profiles. Oh yeah, also on that time frame, on the daily time frame, I would also be interested in things like order blocks. So this is a daily order block there. That's a liquidity profile. Well, what happens when price runs into it today? It gets there, and so there's a level and an order block, and it reacts to it. Boom, there you go. That's a prime example. Another example was here. There's a level and an order block there. When price gets into that order block, look, it goes. Let's go back here. The third time frame you want is, of course, your reference time frame. your reference time frame. Now, on your reference time frame, let me see. Let's get this up here. Let's get this up here. Let's get that there. Let's move all of this up here. Right? Now, on your reference time frame, you're tracking. One second, make that a bit shorter. Discount / premium, expansions and retracement. Let's break that up. Highs, lows. And liquidity profiles. Let me explain exactly what I mean by that. Technically speaking, this is the chart you are really trading. So for me, that would be a 4-hour chart. Let's just stay in one place. Come on, man. So for me, that would be a 4-hour chart. So having put those levels in, and I'm just thinking now, because the problem with EU is it's in a real tight period of congestion. That's why all these lines are together. If it had been across here, they'll have been a bit further spread apart. But because it spent so much time in one area, that's why it's so whatever. But when I would get here, for instance, this is where I would put my controlling high, controlling low, and I would ask, let me hold on 1 second. That's a bit, yeah, let's move to this one. So 4-hour chart, I'd put my controlling high, controlling low, and I'd ask myself questions like, am I in premium or discount? Well, here right now, I'm in an area of high premium. I'm in 78.6. So my first thought, until price breaks through there, in which case it's recalibrating the price range, my first thought is I'm going to sell because I'm in a high range there. So this is why I start forming my trade ideas ready to enter a signal, right? So I'm thinking to at least come down there, at least back to 50 or the 61.8 to 30.2 range, because overall I'm in an area of high premium based on the 4-hour chart. Also, so I'm tracking my, for instance, let's go. This was the first expansion, right? Then there was a retracement down here, 21.4. So deep discount. Then we move. This was the next leg. That formed the 21.4. Then we move. Here we had a 4-hour stop hunt. So in essence, I start really tracking the market on my reference chart. So here there was a stop hunt. And you know what we said? There's a stop hunt. Price nicks that low there into that order block. And then we have a market structure break. Now we're in business. this here is a great sign. So we go from expansion, retracement. Here we come back down to almost 38.2, almost, but back beneath this level there. And then we go again. So I'm tracking the market as I'm taking my trades. What's it doing? That's the next one. It comes back down to 61.8. It goes again. And this time, it runs all the way there. Comes back down. Now, let me teach you guys something, right? Until the market hits 61.8 in a bearish retracement, or the other way around, 38.2 in a bullish retracement, I don't accept it as a full retracement. If it doesn't get to at least 61.8, I don't, or 38.2 the other way, meaning the level just above the 50% level in whichever direction you're going. That's something you want to write down. This is not a trustworthy retracement here. It doesn't work that way. It needs to come back down into that fair region, at least for me to trust that as a valid expansion. So I'm shifting this all the way back up there when it makes that high again. Only when it crosses this do I take it as a valid retracement. But by the time it does this, it has broken market structure to the south side. So on the 4-hour chart, which is my reference chart, my bias has now shifted. Now I'm tracking it the other way down. High, low, retracement. In which case, this is then the new high, the new low, retracement. And now we have a 4-hour stop hunt the other way. Right? Okay. Now, what happened the last, and that's insert. This was the order block, the 4-hour liquidity profile. Now, the last time we had this signal down here, what did we see? A spectacular bullish move. Type if you can see that in the comment section. So what do you think we expect here? Again, a spectacular bearish move. Right? That's what we're seeing here. That's why today was so spectacular. Once that happens, we know that at the moment, this is still the controlling high to this particular retracement. Once it nicks that one out, that high is gone. You have to go back to the last one now, to the one beyond that. It's violated this one. You go back to that one. 78.6. What we expect. Now, I put in 2 extra levels on this fib today. Further information on the fibs. The same way you have premium and discount in the range, you can also have target objectives when you're coming out the range. 121 level, 161.8. So this is 1.21. So this is 1.121 and 1.16118. If that hit that level there, if it hits the 78.6 level and it's going to continue the current market structure, we only trust it to roughly the 121 level. But if its highest retracement was at the 61 anything from the 61 upwards, we're looking at it to get to the 161.8 level. I'll explain that in a future webinar. It's just something that came to my mind to mention today. It wasn't part of today's curriculum, but since we're doing that. And so this hasn't yet come out of this range, so we're still treating that as the controlling range, but I'm doing all that based on the 4-hour chart because it's the chart I am really trading, right? So we came here today and it touched that level. And it engulfed on the 4-hour chart. That was when I started tracking the trade that I told you I did not take. The one that Joshua did. So that's what you do with your reference time frame. Now you need at least one, and I would say 2 more time frames. You can get away with 1, but if you want to do it my way, you do 2. The 4th time frame is what I call my signal time frame. This is the time frame that tells me that trade you were tracking on your reference time frame is valid. Yes, the trade has happened, or the setup, the trade has set up the way you expected it to set up. Now let's go back to this chart here. So this is my reference time frame. It's told me, based on my analysis here, that I should expect a reaction in that level, having cleaned out that stop hunt and a reaction. And if it does, I can potentially trust it to at least the zero, at least back to roughly the 0 level if it's going to stay in this. But since on a weekly time frame, let's go back here. Remember, on a weekly time frame, we came to the conclusion that we thought price was going to drop back down beneath this weekly engulfing level. If that's the case, then on my reference time frame, let's draw that weekly level. So this is the weekly level we're saying we think price is going back down to. And what do you know? Look at this. Isn't this perfect? It lines up exactly with that 1618 level. And there are 2 other blocks here. I'm going to draw 2 of them together. One here, one there. But there's also a manipulation block there as well. So we could be wrong, but everything is pointing to the fact, of course, at the 121 level, we also have these 2 other blocks here. So since it's coming from 78.6, we would look to get out there. Is what we would look to see. But if it breaks through there, we definitely want to get out here. So I framed the setup, or as at yesterday, I framed the setup coming into today. And early this morning, I showed you guys at 11 o'clock session that this was the trade I was going to look for. I thought it was going to wait till tomorrow, but it happened all in one day. Now, my signal time frame is this one. Let me take the Fibonacci away now. We don't need it anymore. So we get to that level. We do see a reaction. The problem is, when that reaction is forming, how do we know we can trust it? Is the question. How do we know for a fact that we can trust this? The truth is we can't. Because that could just go down a little bit and then go back up. So we need institutional order flow principles. So for me personally, my 2 signals on my 1 hour time frame, come on, are 1, a market structure break. That's why I drew this line for you the day earlier on today. I want to see price, market structure break 1, market structure break 2. I was trying to be greedy. It never got to 2 for it reversed. But I said, yeah, I want to see that happen. I want to see price come back up. There is a manipulation block there. It's hard to see on a 1 hour time frame, but if you drop down on a 15-minute time frame, you should see it. There it is. That's the block there. Right? If price gets there and engulfs on a 1 hour time frame, 1 hour engulfing, then I'm in. So this was my 1 hour engulfing there. That was the block. Market structure break. Notice I'm waiting for this signal on a time frame beneath my reference time frame. Why? I could simply have done it this way. Wait for the 4 hour engulfing and enter. But that would have been a 40 pip stop loss, 41 pip stop loss. So your signal time frame helps you refine your entry. So this was the entry for me. 1 second. Oh yeah. Right. So okay. Come on. Insert pre-order tool. Not you. I want you. You. Just gonna keep the. I don't have time to change the colors tonight. Just accept them as they are. Oh, actually got the right colors. So entry there. Stop loss above that zone, which was 13 pips. 1 to 1, 2 to 1, 3 to 1, 4 to 1. So the signal time frame tells me that setup is ready. You can stop here. If you're not a patient person, this is the last time frame you need. If you're OCD like me, I want one more time frame. So signal time frame, 1 second. Gives you entry signals. That's the signal time frame. And then finally, the one that I go down to is what I call my entry / management time frame. For me, coming down from the 1 hour, I'm not a fan of the 30 minutes. Personally, that would be for me the 15-minute chart. Now, I want you to look at that exact same signal. Now, I'm not taking the signal till it pans out on the 1 hour chart. I need my market structure break right there. I need my return. And I need my hourly engulfing. However, look at that same pattern here. Look at this here, right? Here, I can refine the manipulation block. I'll make it tighter. Secondly, I can also refine the engulfing to a 15-minute engulfing there. That's also tighter. Right? What was a 13 pip stop loss in this particular case, it's not that much of a difference, but sometimes it can be very significantly different. What was a 13 pip stop loss is now, and actually this is different. This is now an 8 pip stop loss. Let me know if you can see that. Also, even if I missed the original entry, right? Gerard, you're right. Price levels are predictable. I've been trying to tell y'all for a long time that they're so predictable once you learn them, once you learn how this thing works. Somebody really has to help you not see it. You have to be tricked into not seeing it. It's that obvious. Right? It is really that obvious. So, this is why I want to drop down to a 15-minute chart to refine this level even more. 1 second. Yeah, that's the level actually. So let's not cheat. Actually, no. Yeah, because we're trading on the engulfing, so that's it there. Yeah, I was right. And if you missed it the first time, that same level there is also a fair value gap. Can you see this here? So even if you missed this manipulation block there, right? Just call it a fair value gap. Price runs through this level, comes back down to to fill it, and then runs again. So even without the manipulation block, we can still get this done. There. And even if you wanted to go all the way to the high, that is still 10.8 pips. If you went all the way to the high on the 1 hour chart, you would have entered there. And your stop loss would have been 15 pips. It's not bad. But this is what going down one more time frame can do for you. It gives you more precision. And it gives you a quicker signal. Actually, here, this is the closest manipulation block, actually. This is the last manipulation block. There. This one here. And if you drop down to a lower time frame, you see it. There we go. So, in which case, you could really, if you wanted to be precise. Now, I wouldn't necessarily do it this way because I would want to wait to see at least a 15-minute engulfing. But if you really wanted to be freaky, you could have done that. I personally would not have. I'm just being honest, right? I would want to see at least a 15-minute engulfing. But if you say you were a scalper, you could have gotten in there, put this above the high, and you could have done 1, 2, 3, 4, 5, 6, 7, 8, 9, and pretty much 10. Now, I'm being honest. I'm not good. My risk tolerance is not that high, but you see how you can do it. And so, on that last time frame, what you're doing so and remember, tonight is supposed to be an advanced closed forum. So even for the beginners, I know I'm dropping stuff on you that's advanced, but I want you here so your brain can start to think this way, right? Let's get that comment off the screen. So refined entry and exit levels and risk management ranges. So let me break that up. All right. So, for instance, how would I know when to come out of this trade here? Several ways I could do it. One way I usually do it intraday is if I see a 1 hour engulfing, I'm out. Now, there's been no 1 hour engulfing today so far. This is not an engulfing. It didn't engulf that candle, and the next candle did not engulf it. It did not close above it, so we're still down. See here, instance, yesterday or this day, if you entered in here and you've been going down, when you see a 1 hour engulfing, you get out. Actually, this is not an engulfing here. This is the engulfing here. You get out. And you get back in when there's a 1 hour engulfing the other way. That's how I trade. Now, I told you each time frame has things you can understand about it. As an intraday trader, I'm an expert on the 15 and the 1 hour candles. I just noticed this. It's not in anybody's book, not in anybody's training material. Perhaps I should put it in mine. But I've noticed on a 1 hour time frame, 1 hour reversals intraday are gold. If you have a daily bias, when you have an engulfing in the opposite direction on a 1 hour time frame, it's time to think about getting out the trade. You can get back in. Now, you can see 15-minute reversals that don't mean much. Let's look at that same day here. So, if you're going down, I don't know, let's see, give me an example. I don't know. I hear 15-minute reversal, but it's still coming back down. Anyway, you get the point. 1 hour for me, key. But the other way I know to get out is a 15-minute market structure break. So if I see a 15-minute market structure break in the opposite direction, I'm thinking about getting out. Let me give you an example. Something like that. So here, we're going up. Look at this. We're going up, up, up. And we come down here. We form that low. See that there? That's a 50-minute market structure break. That there tells me price is changing direction that day. If I waited for a 4-hour chart, I might have lost all my profit. But here, it did that. I'm not waiting for this because sometimes you won't see this. Now, if you got a high tolerance risk threshold, you just draw your Fibonacci there and wait for it to come back to 61.8 as the retracement, then get out here. So if you got strong stomachs, this is where you get out. In essence, it's changed direction. You ride the retracement to make some of your profit back and get out there. Me personally, especially if I'm trading thousands in my account, it's not micro, I got like 10 grand in there, I'm out here. This candle, it dips beneath there, that I am Audi. I'm out at this point. Usually this is where I'm coming out. Now you say, oh, but I could have made all that. Well, tough. If you got in here, for instance, you could have made 51 pips. You're only going to make 27 pips. Boo hoo hoo. But would you rather sit through all this? Zero. And then now you're making a loss. So this is an example of how you use your entry/management time frame to know when it's time to get out of a trade. However, this is the 2nd of July. I can almost guarantee that on a 4-hour chart, on a 1-hour chart, we could see the exact same thing. So there we go. So on a 1-hour chart, we wouldn't even have waited for this 15-minute market structure break. On a 1-hour chart, we had the daily engulfing here, or the 1-hour engulfing there. See that? On a day we are going long, if you were going long that day, my argument is you shouldn't have been going long that day unless you were scalping long, because the better trade, which I gave you, if you remember that trade last week, I actually gave you guys this trade. This is the better trade there. 1-hour order block, you take all that, those 3 candles, take them as 1 order block there, and taking out this liquidity level there. So you should have been stalking the short. But let's assume you won. So by the time price got here, you should have been out. But let's assume you didn't see this. You didn't have institutional order flow. You know, you were not this experienced to see this. But even if you thought this was going to keep going higher, the moment you see this 1-hour engulfing here, look at this. This 1-hour candle is engulfed there. This is where you're out. And so let's assume you got in there. You're out there. As opposed to making, again, for 9 pips. Actually, no, let's drop down to a 15-minute chart now to look at that. 2nd of July. There we go. 2nd of July. So you got in here. Instead of making 51 pips, you only make 28. But it saves you. And actually, you probably have gotten out there because it will have gone up that way. 33 pips. It saves you from losing your profit. When you place a stop loss, automatically stops the trade at that point. When you take a take profit point, does it automatically? Yes. Yes, Gerard, exactly. A take profit is the exact opposite of a stop loss. It's just that it stops the trade in profit as opposed to in loss. And so, as new traders, I would say whenever you enter a trade, always put, at the beginning of your journey, always put your take profit at 4-1. Even if you think there's more in the trade, put your take profit at 4-1. Get out the trade with 4-1 profit. That risk to reward ratio will make you profitable. And then as you get more experience, you can plan your exits using liquidity profiles, Fibonacci points, and institutional order flows, or institutional order flow. So there you have it. This here took me blood, sweat, and tears to figure out. I just given it to you for some of you within your first 2 weeks of your trading journey. You will thank me later. This is how I personally use multiple time frames. And it took me an hour and a half to explain it. In tracking the trade on the chart, it can take me 5 minutes to track the trade. Now, remember, my reference chart is the 4-hour chart. If your reference chart is the 1-hour chart, just slide everything down one place, right? Therefore, your big picture chart will be the daily. Your bias chart would be the 4-hour. Your reference chart will be the 1-hour. You can pick 30 or 15 for your signal. Or you can pick 30 for your signal and then 15 again for your entry and management. However, I would always just bypass the 30-minute chart. Especially as new traders, just don't worry about that one for now, right? 30-minute chart, just trust me, as you get more mature, you'll understand why I'm saying so. And for those of you who will gravitate towards it, you'll understand it better. For now, just stay away from the 30-minute chart. Yeah, Tokes, you're right. That's where practice comes in. So I would go straight from the 1 hour chart as my reference chart to the 15-minute chart as my signal chart. You're right, Tokes. We must practice, practice, practice. So the 15-minute chart is my signal chart. And then I would be taking my entries on a 5-minute chart. So I'm gonna give you a quick example of this real quick as we close. We got 1 more minute. So if I'm using the daily chart as my reference chart, I'm like, well, okay. Now bear in mind, because of this, now I can't see the whole weekly thing. On a weekly chart, I could see what happened here. Now because I'm starting from the daily, I don't have all that context. But if I'm really taking my trades on a 5-minute chart, it means I'm a scalper. Why do I need weekly context if I'm scalping? I don't, right? So I don't need to see all this because I'm not going to be in the market that long for this to be a factor. I can use it to give me more context to get my risk down in terms of if I know where it is in the bigger weekly picture, it makes me more selective with my scalps. But then if I'm taking trades on a 15-minute chart, for every 5 trades I take, I'll probably take 20 or 30 on a 5-minute chart. So I can afford more losses because I'm going to have more entries at 4 or 5 to 1. So I start from the daily. I would then say, well, price is in right now an area of high premium. Notice I came to the exact same conclusion as I would on the weekly chart, that it's in high premium. Came to that exact same conclusion without looking at it because I don't need it, right? In which case I'm thinking, well, if that's going to be the case, because I say here there was a market structure break on a daily chart. Yeah, this is what I'd say. There's a market structure break on a daily chart, and then it made a retracement into an area of high premium, in which case I expect it to come back down again to that level. Okay, or at least back down to 50%, I would think, right? Or that region of average price between 61 and 38.2. So again, remember, we're now drawing bodies. So that body there is significant. I'm going to stay away from this range in the middle here of the consolidation because it's going to get messy. I'm just going to draw bodies, highs and lows from these ones all the way down there. So I will draw that and that and that. That would cover that to there. 1 second. And that. I'm not going to bother with that because that's too close. So I'm going to leave that. Actually, I'll just put it there for the sake of it. And that. Even though they're way too close, right? We're just going to put them there for the sake of it. And that. Right. One more. And this one there. If I then, so that's my big picture chart. The 4 hour would be my bias chart. In essence, what direction am I going in? The same way we use the daily engulfing, we'd be using a 4 hour engulfing. Also, we'd see here that price is in a consolidation. Of course, we draw that there as well. That in that level there, it rejected 1, 2, 3. So our bias would be short. Price is rejecting from that level. So even before this day here, we'll be saying, okay, we're really hunting a short, right? We then drop to a 1 hour chart. That would be our reference chart. This will be the chart that we're tracking, right? Okay, so if we're tracking this chart, We put now Fibonacci's. Let me just start from the most recent one. I should be going from high to low. So expansion, retracement, where in between 38.2 and 21.4. Perfect. So we move. Expansion. Here, I don't trust this one. Why? It hasn't gotten back down to the 61.8. That's the real one. Boom. In between, sweet spot, 38.2 to 21.4. We move again. So initially, it'll be this one. Does it get down to the 61.8? No. Then that one. It just about gets down to the 61.8. So we trust it. We then move this down up here. Actually, we'll put it up there. And there. And then this one here, we see a 1 hour market structure break. But we also see here, actually, that was a mistake. 1 second. This would then be the next one we're drawing. From there to there will be the next one we're drawing. Sorry. And then we see a 1 hour market structure break. So we shift bias. Now we're looking to the south. That comes all the way down there. It makes, 1 second. Yep. It gets above 50, pretty much almost exactly to 61.8. But we've also seen this stop hunt. And so we've now shifted bias. Well, where's the entry? You drop down to the 15-minute chart for your signal. So 15-minute chart, your manipulation block is there. That will be your manipulation block on the 15-minute chart. Price comes through it, comes back to it. The exact same trade. You see that? 1 second. 1 second. All right, insert pre-order tool. Indicator. Pre-order tool. So you see how we've arrived at the exact same trade. 75 pips. However, we now have the luxury of dropping down to a 5-minute chart. In essence, all we're looking for now is a 5-minute engulfing, right? Where do we get the 5-minute engulfing? We get the 5-minute engulfing here. It's higher up in the trade and it's even smaller. Now, Talk about, are you still on the chart? Are you still on in the comment section? Talkback loves the 5-minute. I don't. Like I said, I'm perfect with the 15 and the 1 hour. I just don't have a comfort level with the 5-minute chart. Like I said, everybody will gravitate to the charts that you naturally were built for. For me, it's 4 hour, 1 hour, 50 minutes. I am an expert in them. Wake me up from my sleep. I'm comfortable. I know where my stop should be. I understand what price is doing. Talkback is great at the 5-minute. He's also good at the 1 minute. For me, trading a 1 minute chart is like driving at 190 miles per hour in interior streets in London. It's just not how I'm wired. Talkback is laughing, right? Talkback, it's just not how I'm wired, right? But see how on this trade here, if you have the stomach, I notice when it leaves it the first time, it comes back in again. Now, On a 5 minute chart, I would always give at least 2 extra pips for my stop loss. It's one of the rules I do know. So that would be 7.8, 78, or 7.8. So, just to be on the safe side, I give 2 more pips. But still, 1, 2, 3, 4, 5, 6, 7, 8, 9. And if you did it aggressively, you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 plus. Tuckman says, you now love H1. Coming to the light. Tuckman coming to the light. But this is how a scalper would take a trade. Now, you will, for instance, if I took 10 trades using a 15-minute entry, I'd say I'd win 7, lose 3. The 5-minute entry, I'd probably win 5-5. But I've now gone from a 6-1 trade to a 12-1 trade. Even going 5-5 is not that bad. In fact, I probably would make more money going 5-5 on the 5-minute entry than going 7-3 on the 15-minute entry. But that's just not the way I am wired. Secondly, if all you're looking for is 4-1, well, you're out this trade in, let's see. If you got in here, you're out this trade in 1, 2, 3. So, 1 second. From here, 1, 2, 3, 4. You're out this trade in 10 minutes. In 10 minutes, you got in your 4-1. On a 15-minute entry, which would have been this. Let's see now. Which would have been this. To get 4-1, it's going to take you 1, 2, 3, 4. It's going to take you an hour and a half, an hour and 20 minutes. If you did it on a 1 hour, probably take you 4 hours. So the key is, for scalpers and intercession traders, you make decisions quickly, but you get your rewards quickly, or you get your losses quickly. The trade feeds back on itself quickly. It moves so quick that if you're not used to making quick decisions, you get confused. But if your brain works that fast, or you're comfortable with that level of risk that quickly, it pays out quickly, you can go away. But the higher time frames, it takes longer to set up, longer to reward you, but then it also takes longer to lose, gives you more time to figure out what you've done wrong, and the signal stays live longer. If you're taking a 1-minute entry, if you don't move in a minute, the trade is gone. If you're taking a 1 hour entry, you can have 20, 30 minutes to figure out exactly what's going on. As you mature as a trader, you will figure out what works best for you. I've just taught you based on mine. So I go from the 4 hours, my reference. I go from weekly down to 15-minute. You can go from daily down to 5 minutes. You can go from 4 hour. If you are really a micro scalper, Tuckman and I know people like that, right? They take their entry on the 1-minute chart, more power to them. On the flip side, if you're a swing trader, then your daily is your reference chart. You start from the monthly, you walk your way down to the 1 hour. You do you, whatever works for you. Any questions? I've gone on 5 more minutes than I planned today, about 8 more minutes than I planned. Any questions before we shut it down tonight? Any questions? Yeah, Priscilla, I agree. Trading a 5 or 1 minute chart would be nerve-wracking for me. So in essence, you're agreeing with me, but some of you, it won't be, because that's just the way you're wired. You'll be like a fish in water. You were born to trade the 1 minute chart. More power to you if that's you. Talkback will be your personal mentor, not just me. So any questions? I know there's a delay between my asking the question and you're hearing it, so there's going to be a delay back in the answer. So I'm going to give it 30 seconds before I move to close down the session. All right, in the absence of any questions, I move the motion, but especially for those of us in the European time zones, we all go get some sleep. So our final session of the week is tomorrow at 11 a.m. We're going to recap the week, look at what we did right, what we didn't do right. In my case, I'm going to cry about the trades I missed. We'll review the analysis we started the week with. I think every single thing we called for this week has happened. So this is one of those weeks where we were perfect in our analysis, pretty much. Everything happened exactly as we said it would. It took a bit longer at the beginning of the week to pan out. And then at the end of the week, it happened a bit quicker than we wanted it to, but we called the week perfectly. And so even if you didn't take a trade this week, it should give you the satisfaction of knowing that you're getting this thing and that you know what you're doing. All right. Yeah, Priscilla, I'm excited that you get to learn. Gerard, yep. Go watch the videos again and again and again and again and again and again and again. Right? One more thing for me before I dismiss everybody. This is what you have access to. For £79 a month. Find me this anywhere in the world at this level of quality, and I will match their price at this level of quality. The level of hands-on help, involvement, direct access, personal coaching, So why keep this to yourself is my question. Get the word out there. Now, if you refer people who sign up for the registered mentorship and pay for it, for every month that they pay, that they stay on, you will get a discount off your tuition. We'll give you the information privately in the Telegram groups for the registered students. But go out there and spread the word. Go out there and spread the word. See you guys tomorrow, 11 a.m. Take care. As usual, registered students, watch your telegrams. Make sure you don't miss anything. Take care. Bye-bye.